Something is happening in crypto that's bigger than anything we've seen before, and it's moving faster than anyone expected. Bitcoin didn't just break $73,000 0 cents. It obliterated resistance levels that analysts thought would hold for months. And this time, it's not retail hype driving the wave. It's BlackRock, Fidelity, sovereign wealth funds, Wall Street itself. The same institutions that once called Bitcoin a scam are now rewriting their strategies to include it as a core asset. BlackRock's Bitcoin ETF, IBIT, has shattered records. In less than 90 days, it pulled in more capital than any ETF in history during its first quarter. That's not a fluke, that's a signal. When BlackRock makes a move, it's not by accident, it's calculated, it's strategic, and it's long-term. They don't chase hype, they create it. That ETF now holds over 280,000 BTC. Think about that. One firm now owns over 1.4% of all Bitcoin that will ever exist. And guess what? They're not alone. Fidelity's FBTC isn't far behind. Add in ARK, Grayscale's revamped spot ETF, and we're talking about billions of dollars in inflows every single week. The gates have opened, and the money is rushing in. This isn't the future, this is now. And then there's Ethereum. With its transition to proof-of-stake complete, and massive L2 networks like Arbitrum and Optimism scaling activity off-chain, the Ethereum network is handling more transactions than Visa on some days. Real yield is now being generated through staking. It's not just about speculation anymore. Ethereum has become a functioning financial layer, a programmable global settlement system. And the upgrade roadmap? It's only getting better. Dencun just went live, fees are dropping, throughput is climbing, and adoption is spreading. Solana, once laughed off as an ETH killer that couldn't stay online, is now proving the skeptics wrong. Since early 2024, it's seen the highest growth in active developers after Ethereum. Major brands are building directly on it. Shopify integrated Solana payments. Visa is testing USDC on Solana rails. This isn't a memecoin casino anymore. It's an ecosystem being used in the real world. But even as the top chains dominate headlines, there's a new layer of excitement that's catching fire. AI tokens. Projects like Fetch AI, Feed, Render, and RNDR, and Akash, AKT, have seen exponential growth, not just in price, but in actual partnerships and use cases. As AI continues to push into mainstream applications, these tokens are becoming the back-end infrastructure powering decentralized machine learning. Google might dominate traditional AI, but the decentralized world is building permissionless AI networks. Imagine GPT-level intelligence running on open, decentralized rails without a tech monopoly controlling the data. And don't forget the real dark horse, Toncoin. Telegram's integration of Ton is flying under the radar, yet Telegram has over 900 million users. If even 10% adopt Ton as their default wallet or token, we're looking at an overnight transformation of one of the largest social platforms into a crypto-revenue economy. That's not speculation, that's distribution at scale. No other chain has that kind of social leverage right now. Not Ethereum, not Solana, not even Bitcoin. But here's where it gets even wilder. We're on the verge of regulatory clarity in the US, something crypto has been fighting for over a decade. The FIT21 bill just passed the House. For the first time, we're seeing a bipartisan push to classify digital assets correctly, separating commodities from securities. That means projects that were previously in legal limbo, like XRP, like Cardano, might finally have the green light to expand without fear of being delisted or sued out of existence. Why is that so important? Because regulation breeds confidence. Confidence attracts capital. Capital builds infrastructure, and infrastructure leads to adoption. Stablecoins, once seen as niche, are about to go mainstream too. Circle's USDC is getting integrated directly into Apple Pay and PayPal. And behind the scenes, a new class of tokenized treasuries is emerging. These are interest-bearing stablecoins backed by US government debt. That means holding cash on-chain will soon earn yield. That's an existential threat to banks, and they know it. At the same time, major crypto exchanges are going public. Coinbase's stock is outperforming most tech companies this year. Binance is undergoing restructuring to satisfy global regulators. Kraken just announced plans for an IPO. The Wild West is turning into a global financial arena with compliance, transparency, and institutional credibility. Meanwhile, in Asia, Hong Kong is opening the door to retail crypto ETFs. South Korea is testing its own CBDC. The UAE is rolling out licenses for Web3 startups like wildfire. The narrative that crypto is dying couldn't be more wrong. It's evolving, maturing, scaling, and doing so faster than almost anyone can process. But here's the twist most people don't see coming. Every 4 years, Bitcoin undergoes a halving event, cutting block rewards in half. That happened again in April 2024. Historically, each halving has triggered a massive bull run within 12-18 months. But this time, something's different. The institutions aren't waiting. The ETFs have already launched. The capital has already flowed in. And the price, it's already flowed in. That means we may not have 12 months of buildup left. This could be the moment where crypto doesn't just spike, but stays up, where it doesn't crash back 80% like past cycles, but consolidates and grows. Because this time, the buyers aren't Reddit traders, they're sovereign wealth funds, family offices, publicly traded companies with long-term time horizons and deep balance sheets. So what does that mean for you? It means the window is closing, the opportunity is shrinking, the asymmetric upside, the kind where $100 turns into $10,000, doesn't last forever. Once crypto is fully regulated, institutionalized, and integrated into every major platform, the risk will drop. But so will the reward. The smart money is already positioned. The question is, are you? Because whether it's Bitcoin, Ethereum, Solana, AI tokens, stablecoins, or the next breakout chain, it's no longer about guessing the top meme. It's about understanding the shift. A shift in money, a shift in power, a shift in trust. This is more than just investing in crypto. This is about owning a piece of the new financial system. So if you're still sitting on the sidelines, now's the time to wake up. Subscribe right now, hit that bell, leave a comment telling us your one pick for the next 10x coin. Let's build together, learn together, and ride this next wave while the rest of the world plays catch up. Because in crypto, those who understand early win big later.